Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca. He invented the Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus Award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Jim, thanks for having me back, and thanks to everyone listening in.
Are investors on both sides of the border awaiting the results of the U.S. election? And especially if Joe Biden wins, what the hell does that mean to our stock markets and investments?
Well, certainly insiders are waiting. That's for sure. And we saw some tech money come off the table over the weekend, but that could have been due to all sorts of magical option-related things. But no, insiders are not buying the dip here, and I think one of the reasons is because of an election uncertainty. Now, you know, we've all sort of got accustomed to Donald Trump and his colorful style and his ability to spend a lot of money via through the Congress and juice the economy through tax cuts, and then he worked with the Congress initially in the COVID-19 pandemic problems in the spring and got a lot of money through and really helped to juice the economy. And then we've been kind of treated to that over the past little while. But that may be coming to an end. If you look at the recent polls, and I know I have a number of friends who like Mr. Trump, and that's fair enough, and they do not see how he could possibly lose. However, the polls are suggesting that he is on the path to losing if there were an election today. And yes, I know Hillary was ahead in the polls as well. The problem this time is a couple of things. The lead that Joe Biden has is significantly wider than Hillary had, and Joe Biden is not Hillary. So Donald Trump, let's just say he's the underdog, and doesn't mean he can't win. It just I think as investors, we have to look at, we have to prepare for what is the likely outcome, not what the preferred outcome might be, depending on, what your persuasion is, if you have one. Let's deal with the probabilities. And right now, there's a high probability that Joe Biden will win. Doesn't mean he's going to win, but soon markets are going to start having to really wrap their heads around that. So, we're having this interview now on Wednesday in the first part of September. I think by the last part of September, everyone in the market will be focused on what does a Joe Biden presidency potentially mean. We have the first debate on September 29th. This is going to matter. And why does it matter? Is this politics? I can hear now, politics, they're all the same. They're all going to spend money, and they're all the same. Well, actually, there is quite a bit of a difference between Biden and Trump. So, getting back to the insiders, they have not been buying the dip. And I think one of the reasons why is that they're likely concerned about the Biden tax policies. Now, we know that he's promised to raise taxes on the rich, people making over $400,000 a year, and to roll back corporate taxes. Okay? So, that in itself, I know I hear a lot of people say, well, the Democrats have raised taxes before and, the market's dealt with it. Yes, it's true. They have, and maybe they will this time. However, it is uncertain because while we know what his tax policy is setting out to do, and it works out, Jim, about $350 billion in tax increases every year for the next 10 years, depending on the timing. That depends on, do they do it all at the beginning or they do it towards the end? But we don't know. But we do know that he's talking about raising about $3.5 trillion in taxes over 10 years. We know that. Okay? What we don't know is really what he's going to do on the growth side. We know what his ideas are. We know he wants, to favor green investments and the like. He wants to, spend money on what he calls caregiving, and he wants to, spend money on housing, which is fine, but we don't really have a lot of details. And we don't know, is that going to be, is that going to be where the $3.5 trillion in tax hikes go? Is he going to, spend more? We don't really know. And this is an issue, this is going to be an issue, I believe, for markets, because if he's actually going to be raising taxes less than he's going to be spending, we're going to be going into a different period than we had with Donald Trump, where Donald Trump was able to get the government spending again. Now, whether you're in favor of that or not, I mean, it's just the reality. We've seen record deficits under Trump, and yes, there's been the COVID-19 problem, but the fact of the matter is there's been record deficits under Donald Trump. And if markets start to get the sense that that's going in reverse under Biden, there's going to be some reckoning here in terms of the outlook for the economy, the outlook for the dollar. If it looks like, if markets start to worry that a Biden administration could tip the U.S. back into a recession or keep it in recession, as far as officially it's still in recession, but if it turns out to be a low growth take that investors have over the next few weeks, we're talking, I think that the stock market is vulnerable, for lots of volatility. Now, look, politics is a dirty game, and it may suit the Democrats quite well to see the stock market stumble here, and people start worrying about the economy, because they want to win, and typically a weak economy does not help the incumbent, and the incumbent is Donald Trump. So Donald Trump, he needs people to believe in a stronger economy that he can deliver, and he also needs the COVID situation to settle down. And let's just assume that's as investors, we're going to take the cards that we are dealt with COVID-19. But on politics, there is a dynamic that's unfolding here that I think we can get our heads around, and it does have implications, for what investments might do well and which ones might be vulnerable over the next few weeks.
If you go after millionaires and billionaires tax-wise, can't the American rich people just park their money someplace else where it can't be taxed?
Well, I mean, that's part of the problem. When you do that, is you push money out of the economy. And so, we've seen this movie in Canada and, in the past. So they're not quite used to that in the United States. And the other shocker, Jim, that's going to happen for Wall Street, it's going to be a huge shocker. Okay? A big shocker. Wall Street is not ready for this. Investors, who are leveraged into the stock market are not ready for this. But it just may be that the more Joe Biden talks about taxing the rich in the campaign, the higher his poll numbers go. No, he's not going to win over, wealthy Trump supporters, but he's not after them. He needs to get the people who didn't vote for Hillary, who should have voted, who they expected to vote for Hillary, who just stayed at home because they didn't like Hillary. Okay, so a lot of African Americans did not vote last election, where normally the Democrats would count on their support. If Biden goes around and starts saying, "I'm going to tax the rich. I'm going to tax the rich. I'm going to make it more fair," and whether you believe it or not, or whether you agree, and yes, I know there's an argument that Trump has done a lot of good for the African Americans economically. This is true, but in my view, it is true that the median income of African Americans in general improved under Trump, but there's a lot that did not improve under Trump and did not improve under Biden and under Obama. I mean, this has been a structural issue. So I'm not trying to sort of take sides here on which party is better. The key for Joe Biden will be, though, to get those people to go and vote for him. Okay, and one way he might do it is to trumpet this: I'm going to tax the rich. I'm going to tax the people that Donald Trump was giving tax breaks to, and that is solely to poke those people to go out and vote for that didn't vote for Hillary Clinton, who stayed at home to go and vote for Joe Biden. And this will shock Wall Street that it might actually work. Okay. Now we've seen this play out in Canada. To Canadians, this is just par for the course. But in the United States, this is not par for the course. Times have changed. We've had, greater inequality, and the COVID-19 crisis has exposed that. I think the Democrats understand that, and so fasten your seatbelts, Jim. We're in for some interesting times as we get closer and closer to that September 29th debate.
We'll have more with Ted Dixon right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Ted Dixon. Ted, what does Biden's strength in the polls mean for Canadian stocks?
That's a great question. And, we talked about this in our market report to Canadian Insider Club and Inc. Research subscribers, and we published on Tuesday. And the way we look at it is this. Okay. There's sort of three key areas that are at play here. There's the energy sector. Okay, it's a mixed bag for the energy sector if Biden wins. Okay, it's probably good. I would say it's probably unequivocally good for green energy. Okay, so whether you're into green energy or not, if you're into making money into the stock market, it's probably time to brush up on your green energy stocks. Okay, if under a Biden regime. Oil patch is, it's an interesting one, the oil patch, because he's kind of backpedaling on his fracking, but for Canadian producers, the question is, okay, if Biden effectively limits growth in the oil patch in the United States, that could help keep oil prices relatively, higher than they would have been. On the pricing side, that could actually help Canadian producers in an odd way. The problem is, of course, we still have all these problems with pipelines. Biden is probably not in favor of the Keystone XL, but TransCanada, they cut a deal with some unions to help, I think, counterbalance the environmental part of the Democratic coalition. So that will be an interesting one to see how it plays out. It's a mixed bag in terms of the oil patch, but it's not necessarily all bad for the Canadian producers. We'll just have to see how it plays out. The other area that we're really looking at is the resource area in terms of minerals and mining. So this is a tricky one. I think it's a very tricky one, and it's a very important one, I think, for those playing in the mining space. Now, we put out a piece, and we've suggested, and this is kind of borne out too by what we see insiders taking money off the table in the gold and precious metal area. Okay, and I know, I have friends who play the gold stocks all the time. They don't want to hear about gold. They don't want to hear about gold stocks not going up, but I think we're in for a period of consolidation either way. I mean, right now we see the gold-silver ratio. It's kind of consolidating around the 70, 72 area after a nice run. And yes, look, over a longer term, sort of 12-month basis, I'm very bullish on the outlook for precious metal stocks. But the next few weeks, we have this Joe Biden factor. And I want to sort of give you a little analogy here why I think Joe Biden could be bad for the gold area as we get as we work towards November 3rd. Okay, Okay, so basically under Obama, which is now what people are going to start thinking about. Oh, Joe Biden could win. Last time we had a Democrat, that was Obama. What happened there? Okay. Well, when you think of what's good for gold, you think of let's think of a hurricane, Jim. Okay, because gold is your store of value. It's your safety. It's your safe harbor. It is where you're going to that is your protection from monetary fiscal mayhem. Okay. Now, so let's think about a hurricane here and how it develops. Okay, you need to have this big ocean of liquidity that heats up, and the Fed has to heat that up. Okay, and we had that under Obama. Okay, and we've had that under Trump. We've had the Fed, and the Fed's really really warmed things up now. Okay, to get that air, the moist air, heating up, and so. But you need, for the storm to hit, you need to have the fiscal winds. You need to have prevailing fiscal winds blowing hard, okay? And under Obama, we did not have that. Yes, I know we've heard about deficits and the like, but they were category 1 and 2 deficits, Jim, compared to what we have now. And there was the Tea Party that limited those winds, limited those deficits. So coming here into COVID-19, and as Trump, basically blew a gust of fiscal winds, across this ocean of liquidity that the Fed has set up. We had this massive storm that was perfect for gold, perfect for silver. We could see mayhem coming on the horizon with big deficits as far as I could see. Everyone needed some gold, as a safe harbor. But wait, Joe Biden is talking about raising taxes and potentially not spending as much. That ocean, is still going to be there with the Fed heating things up, but what if the winds die down? What if the storm clouds, all of a sudden seem a little weaker on the horizon? And this is what market participants are going to have to get their heads around over the next few weeks. Is Joe Biden going to pull back the deficit? Is it going to make it less risky, a more boring fiscal environment where you might not need as much gold? And, so people are going to have to get their heads around that. Now, personally, I think that it's not an option for either Democrats or the Republicans to stop spending. The Democrats may try. They may put out a spin that they're not going to spend, which will confuse markets initially. But, to get elected, they may try and position themselves. We don't know. This is the uncertainty that we're facing right now. So I think gold is, and I could be wrong here, but I think gold is going to face some headwinds until we get a clear picture on whether Joe Biden is going to be seen as a relative fiscal conservative compared to Donald Trump. And is he going to favor a stronger dollar? Because establishment candidates have also favored a stronger dollar. And Joe Biden is an establishment candidate. Donald Trump is not an establishment candidate. So, the best combination, I think, personally, for the gold and silver market would be, for Donald Trump to win and have a Democrat Senate and a Democrat House, and then I think you'd have those Category 5 hurricanes blowing pretty quickly again, because Donald Trump knows how to cut a deal. We haven't seen a deal on the second round of stimulus right now, because now we're in election season, and it's in the Democrats' interest not to have a package because they don't want a strong economy, because they want to win. So, we're into this silly season right now, and you're going to see a lot of volatility. And if you're playing the mining market, here's what we like. Our indicators are still relatively upbeat for the specialty mining. And part of that group would be, battery metal type mining, nickel, cobalt, and the like. And why I like that group right now is because I think they can win under both a Biden and a Trump scenario. They would win under a Trump scenario, even if he's not going to pursue a green energy agenda. He would prefer a weaker dollar, and that helps all commodities. Whereas Joe Biden is, if he pushes his green agenda, it's going to help battery technology type stocks, electric vehicles, that whole bit. But in terms of the mining, then you got to focus on those plays those companies that are focused on ESG, type strategies, environmentally, the socially responsible, sustainable, and plus governance, we're talking about that in Inc. Chat. I've talked about a couple of plays that I'm looking at. So if you're interested, sign up on CanadianInsider.com, and you're invited to the Inc. Chat or IncResearch.com. I'm looking at a couple of plays right now in that area. One, they're actually quite related. There are opportunities there, and I think they could do well under both scenarios. But yeah, while we're going through this election period, it's going to be, I think it's going to be a tricky one for precious metals. And on weakness, I'd be looking at the battery metals as a way to shift and keep my exposure to the mining space. But that's kind of the area that I would prefer right now. But look, I could be wrong, and we could, gold could be off to the races in a few days, just because, there is long-term pent-up demand for gold and silver, primarily gold. If we do get some inflationary surprises, silver will also maybe get some momentum behind it. Once you get a certain amount of momentum, it feeds on itself. We could be there. That is, I wouldn't rule that scenario out. But based off of the politics of the season, I think it's going to be tricky for gold and silver to race ahead here.
We'll have more with Ted Dixon right after this.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, would people look at precious metals as some kind of a safe haven no matter what happens in the election in the U.S.?
Well, I think over the medium term, for sure. And there's another scenario that we should really, hit on, and that is the too close to call election scenario. And I've indicated that I think, Joe Biden is the front runner here, and I think he is, but it doesn't mean that Trump couldn't close the gap, in the final days and weeks of the campaign, and we could have a too close to call election. Well, then, you've got a different kind of hurricane coming your way. And, it's a political hurricane, and that too would favor gold and silver. So no, they're not, there's a place for gold in your portfolio still. I'm just, worried, in terms of, short-term opportunity here. I think, there's going to be, a period where maybe the U.S. dollar gets some strength, and there may be times where gold slips, but maybe at some point it becomes a buying opportunity if it slips very far, because you could have one of these strange outcomes in the election, and the polls have been wrong. They may indicate a Biden sweep, and you don't get a Biden sweep; you get a too close to call. So, there's all sorts of outcomes where precious metals could be helpful. And the one I'm really interested, though, is whether the gold-silver ratio heads back up towards 80 or 100 under a strengthening Biden candidacy, or whether we see it break below 70. And I'm keeping a close eye on that. We have it on CanadianInsider.com in the precious metals section. You might want to keep your eye on that, because if it breaks below 70, then the race is back on the silver. And you're looking at you want to brace yourself for that gig economy scenario that we talk about a lot, government-led inflation, because that's what it would be signaling. I have my worry hat on here, starting to sort of after Labor Day. Have my worry hat on about what the implications are of a stronger Biden presidency. I hope we're not headed towards a kind of Obama type scenario on monetary steroids. I just don't think that would be good for Canadian markets in general. But look, you have to play the cards that you are dealt. So, certainly I would keep an eye on, I'd keep a list of green energy stocks, that Biden might favor, that his policies might favor, and that's our focus right now is how does Biden do in the polls, and do we keep that exposure to the green energy? Because I think if the tables were to turn on, and Trump were to turn ahead, then I think you're back to what worked in the summer. And that's how I see it right now, anyway.
What happened with cryptocurrencies over the weekend?
Well, it was a crazy weekend for sure. Crypto markets are open 24/7, and sometimes it's a blessing and sometimes it's a curse. But basically, there's a couple of things I think that went on. There was selling related to the weakness in the stock market, and you had levered players who, for whatever reason, had to reduce their crypto exposure or wanted to sell into stock market weakness. But there's also something else going on with Ethereum, and it was off about 30% from its September 1st high. Now, Ethereum is the building block for decentralized finance, and what really that is a fancy, or jargon word for an alternate financial system. Okay, that's kind of developing on its own. It's a competitive. It's building to compete with the current banking system. Okay, and so it's in its early stages. And what has happened with this, this first rush into this decentralized finance networks, these networks that have been built on Ethereum, is that they got clogged up. And you're ending up having to spend hundreds, but significant amounts of money in transaction fees just to move a few $1,000s around, and it actually became more expensive than going to your bank and paying bank fees. And what's that all about? Crypto's supposed to be building a solution and an alternative to the current system, not providing something that's as bad or more expensive. So, but these are growing pains, and I think what happened was you had this stock market selling, but you've also had these sort of growing pains, structural, I don't want to call them structural, but technical issues with some of these decentralized finance applications that they just became too expensive to transact in, and that's because Ethereum is kind of a lumbering platform right now. They're working on a new version of it that should be working better. But then there are also competing cryptocurrencies such as the EOS, which is called the Enterprise Operating System, which is seeking to challenge Ethereum, and it's gonna have its own decentralized financing app. So, it's in early days. It's still exciting days, but it's in volatile days. And while Bitcoin I see as sort of an alternative to gold as a store of value, Ethereum is a workhorse. It's more like an industrial metal that's put to work. And both Bitcoin and Ethereum and EOS, these are all in early days. They're just developing. They're going to be much more volatile than gold is. So while I think there's a place for both in most people's portfolios, depending on your age and risk tolerance, certainly Bitcoin and cryptos are going to be much more riskier. And so, for people who are older and have lower risk tolerances, that may not be for them. But certainly for younger people, it's something to look at depending on your risk tolerance, because, there's exciting things happening in the Ethereum, EOS, decentralized finance space. But, like anything new, it has kinks and they have to be worked out. But it's not a showstopper by any stretch of the imagination as far as what I can see.
Also, with the e-currencies or cryptocurrencies, they could blink out in a second with a power failure, or you forget the password. Gold, at least you know where it's buried or stored, and even if the price of gold goes down, you still have something. Even if it's $200, it's better than zero.
Right, so long as you've stored it in a place you can get to in a pandemic or in a government lockdown or so there's pros and cons to both, and that's why I think there's a role for both. And you've got the nice thing about crypto is, though, that it is a platform that can build an alternative to the current system. So if you're looking to rebuild the current financial system, sure, gold can play a role in that, but it cannot provide the platform to as an alternative to the system, right? So yes, you could have a gold standard. I don't think we're having a gold standard again. Like, I just don't think there's the political will for that. Others, yes, I know there are people and there are commentators who believe that we're going to a gold standard. I do not believe that. I think that's propaganda, to be honest with you. I think it's certain commentators who have business interests in the gold area that want to promote that view. I just don't think it's realistic at all that we're ever going to go back to a gold standard in the United States. It's just not feasible. Could you have a decentralized cryptocurrency system that evolves on its own? I think you could. If for no other reason, you'll have a lot more younger people who are savvy technically, and also, Jim, you can store your cryptocurrency off the grid. You can store it in your own hardware wallet. So it does have some of those same safety properties that gold does. But look, it's early days. Gold has been around for centuries. Gold is not disappearing. It's always going to have a role. It's always going to have a role, in terms of my investment strategy. And, it's just a question of how much gold you need, not whether, in my view, in my opinion, not whether you need it or not, because we haven't, once we reach nirvana and everything's great and there's no hurricanes, and hurricanes have been banished, then, I'll sell all my gold or gold miners, but until that day comes, there'll always be a role for them.
Plus, millennials and younger investors have never been keen on things you have to dig out of the ground. They always like something they can run off their phone.
Well, that's a very good point, and I think what the mining industry, probably one of the best things they could do is, raise awareness of how important mining is to not only just the economy, but to your phone, right? Like you would not have a phone without mining. And so, I think there's an opportunity there. And, to Elon Musk's credit, he's actually raising awareness of the mining industry by saying, I believe now, I'm getting secondhand, but I believe he's indicated that, he's looking for a nickel supplier that, that is net zero or close to net zero in terms of carbon emissions. Okay. So that's an opportunity for the mining industry to rise to that challenge and say, yes, we're there. We're there for that. We're all in. And, it's a great opportunity to connect with a younger set of, investors. So, and there are some companies that are doing that. And I would use some skepticism when I see a company talk about that, because it's easy to talk about and it's harder to do. And so you have to really look at the management of the company, of a mining company. Are they serious? Do they have the integrity to deliver a net zero mining operation, as opposed to a promoter, or somebody, who's, just come out, anyway, I think you get my point. I think your listeners probably get my point, is that it'll be so fashionable to talk about ESG in the mining area that everyone's going to be doing it, just like everyone was rushing to, convert their mining companies to cannabis stocks, what was it, 2 or 3 years ago. So, but there are a couple of companies that I've already spotted. I'm keeping my eye open for that. I think you have to be skeptical, but you also have to be on the lookout for the right ones, because that's the opportunity for the mining industry, is to, yes, rise to the challenge that Elon Musk has put out there and say, we're part of the solution. We're not part of the problem.
Ted, thank you so much for chatting with us.
Well, thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca. You can find his website at CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.